So if you've ever watched Shark Tank, you notice one of the biggest concerns that the sharks have is other people's ability to come in and copy an idea. Something has to be unique and trademarked, or at least trademarkable, to protect that business. The reason why it is because other people come in, they also start taking up shelf space, and you lose market share. Things are a little different in trading when it comes to indicators. For example, we have DocuSign open right now on the 1 day time frame, and the simple moving average here is the 50 moving average. The more people that follow that indicator, the more the price will go up when, for example, the indicator is giving a buy signal, which in this instance would be the price action above the 50-day moving average, and ideally the moving average moving in the up direction, right? So like right here, you can see that although the price action is above the 50-day moving average, the moving average was for the most part flat. So the reason why I bring that up is because more often than not in trading, you want to actually, I don't want to say follow the crowd, because you want to be ahead of the game in some sort of sense. You want to find an edge and allowing you to be able to get ahead of most of the crowd, right? Let others lead the way, start changing the sentiment, and then you hop on that wave and you get off once a bunch of people have jumped in. I have a strategy here that's a little different than that, although it kind of goes along those same lines, and it's using the VRVP on a lot of the stocks that were the meme stocks, the stocks that were in the bubble, the higher volatility stocks during the COVID pandemic. So I'm going to bring up a couple of them here. It's going to be DocuSign is one of them. That's going to be the first example. SoFi, and then Snapchat. So the reason why I believe this is a good strategy, and I'm going to tell you what it is in just a minute here. It's a very simple strategy. The reason why I brought up the Shark Tank example is because although in trading you want to kind of follow the trend, we have a huge opportunity with stocks like these to where over time, since now that we have time that has developed, because here's the COVID pandemic bubble, this was the interest rate fear that happened around the time that the Ukraine-Russia war started. And then all of this downturn, the bubble popped, and now we have consolidation on a lot of these high volatility meme stocks. Some of them more so than others. For example, you have Marathon Holdings that follows Bitcoin, is kind of still just following Bitcoin, although in a somewhat erratic way right now. But you have these ones that just went up in a very clear bubble, something that's what I think Discovery, or I can't remember, there was another stock that did this years ago, and that was used as an example during the COVID pandemic to say, hey, look, this is what a lot of these stocks are probably going to do. So the VRVP is an indicator I have up right here. I modified the settings a little bit. Basically, I just made it smaller and I made it a little bit more detailed. So I can make a video later on how to do that if that is desired. But otherwise, essentially what it does is it measures volume at a particular price. So a lot of people use the volume indicator, the one that has the red and green bars, and they'll usually put it at the top of the screen or the bottom of the screen here, and it goes the long ways. That shows you volume at a particular price, and then it's your job to kind of correlate that with the particular candle. So like, for example, I'm not going to bring it up, but most likely there was a high amount. Oh, there we go. Most likely there was a high amount of volatility right here for green because it's the beginning of that uptrend and it was the first huge spike. So these next candles probably had a increase of volume, and then the green volume sort of most likely died around here, and then you saw the decline. The VRVP will measure the volume, as I said before, at a particular, move back over here, at a particular price action. The reason why that's important is because it shows you support and resistance, which is one of the most important things when it comes to trading, because you can look at the RSI and all those oscillators, and you can look at the simple moving averages all you want, but at the end of the day, those are still going to give you by themselves what would be considered false signals, because they're going to do things like this. They're going to come up, tease you, and come back down. And if you just buy every time you go over the simple moving average, you're going to get a lot of false signals. So you need something that measures the probability of the price action continuing in that direction. And that's where the VRVP with the volume comes into play. So now that we have a significant amount of time that has passed after the bubble, we have floors on a lot of these stocks. This is the DocuSign floor. So in this strategy, obviously the strategy is to buy as close as to the lower floor as possible, the lower end, so down here. But anywhere along here is a significant amount of volume, which means it would take a significant amount of news, or I would say bad earnings reports, or just an economy, maybe a really bad economic downturn in which everything is going down. And stocks like these may or may, some of them would fail. You had stocks like during the Great Recession that failed. But these are probably going to go down a lot less than the stocks like NVIDIA. Wow, I brought up the wrong one. 1 second. There it is. Stocks like this that have been running for a huge amount of time. Apple, for example, although a great stock to get into sort of near the bottom of an economic turn, being a blue chip, this thing would crash tremendously. So as long as the fundamentals on companies that have done this during the COVID are okay, then, the more likely they would be to survive some sort of economic downturn like that. If you're looking at DocuSign specifically, I can't say that I've looked into their fundamentals a huge amount. At the very least, it's safe to say that DocuSign is the most common and popular, other than maybe Adobe, with as far as using electronic signatures and things like that. So it's got some name recognition essentially. So just one little thing to think about as far as protecting yourself there. So the benefit of this is you have a lot more upside than you do downside, especially if you're getting in at the very bottom. The other reason why, so basically, essentially, this is probably going to, or at least there's no indication that this is really going to go up, like start skyrocketing anytime soon. I could see something like that happen when interest rates start to lower, or maybe after the Fed's like, okay, we're going to start lowering interest rates once every 2 months or once every month, something like that. I could see the big money flow back into stocks like this. The second benefit is the lower the price like this, the higher the volatility generally. So for example, you have DocuSign right here, that's 38.88. And if we just bring up a long position, if you were to time it perfectly and buy there and sell at the top, that's a 65% increase. That is huge. I mean, that is a huge increase. Now, if you go to something like SoFi, which is another perfect example like this, as you can see, you can zoom out. And another good point to look at is you can obviously tell these are in the bubble, because look, even there was a couple points right here, even where there was consolidation, but even then, look how low the volatility is there. That means people were getting in and getting out quick, and it just was driving up the price, and big money dumped, and then everyone went with it or held the bag. Another example huge volatility right here. You have a low of 451 and a high there all the way up to the top of 1162. That's 156% increase. As of right now, at least, the price action is above the simple moving average. What you would want to look for as far as a turnaround, something that's showing some sort of improvement, is to have that price action hold and have the moving average actually be moving up. Another example I want to bring up is Snapchat. So you can actually see Snapchat has been gaining momentum. And this is sort of what I'm talking about as far as what you would want to start to see. So you buy down here and you can DCA into it even because you're looking at your floor. Anytime it hits that thick bar, you can buy, and you're probably being in green, going back from green to breaking even. Nothing wrong with that, given that the strategy is to take advantage of the very, very bottom. This is bottom dweller sort of trading, right? And right here, you can see the volatility for a long position. You have somewhere of the floor there. And that's 139% increase from just the bottom of the floor to the top of the floor, really. So there's a range in here, right? Let's just move this for a second. And you can draw one or you can use the tool. But there's very clearly consolidation. Whoops. Let's go back. There's very clearly consolidation down here, and there's very clearly a range. There's a top. And there's a bottom, and that reflects the VRVP, see, right there. So sideways chopping isn't always the best thing to trade into, but when you have an opportunity like this, it is beneficial because of the volatility and because you're playing it safe on the floor. You're not worried about it as much continuing down. Obviously, any stock can do anything for any reason or no reason at all. That's a good saying. I should coin that. Even though that's the case, it's probability and it's odds, and you're taking advantage of the fact that if this ever does start to take off, or institutions want to play this game that I'm describing right now, because they very much do, there is past history for traders, even the common traders, really, the people that they're trying to get to hold the bag, say, oh, look, the price has been there before. It's been $80 before. This starts picking up steam. It gets to like $30. People are like, it starts to gain attention online, on YouTube, more and more, and then institutions sell out. And you've already been in down here, right? So that is an idea I have for you. One of many. If you do like this content, hit the like button. Just keep in mind, I'm just some guy on YouTube, just like every other stock financial YouTuber out there, just some guy giving his advice. None of us know what's going to happen. All right. So we'll see you next time. Thank you.